Hello again, how you doing? Stephen Fallon here, Future Proof Finance. Number 4. Number 4 in a series of video about pension. This time talking about pre and post retirement. A lot of confusion about pensions out there with all the various names of various things like AVCs, PRSAs, PIPs, ARFs, AMARFs, all of these various different names and things. In simple terms, pension is a tax efficient vehicle. Your money in your pension is sheltered from tax. So whether it's pre or post retirement, it's sheltered from tax while it's in the pension. So that's something to bear in mind. So people, when I get to retirement I get a pension, or but before retirement it's a pension. Basically, if your money is in a tax saving a vehicle through your income, so your relevant earnings, that's a pension. Okay, pre-retirement you have various options. I went through some of these on previous videos. So you have your PRSA, personal pension, your company pension or director's pension. There are various ways of putting money away pre-retirement. Post-retirement, you have two options currently. The old way of doing things was when you got to retirement at 65, you bought a thing called an annuity, which is effectively a reverse life assurance policy. So meaning that it will pay out up until you die. Now generally the first 5 years are guaranteed, but that's in effect what it does. So you give over your capital to a life assurance company, and they will guarantee you an income up until you die. Just coffee ready, hold on. Okay, so at one stage annuities were the only game in town, and at retirement at 65, if that was your retirement date, you went off, surrendered your capital and got yourself an annuity. Now you have a thing called an AMRF / ARF. What that is an approved minimum retirement fund, an approved retirement fund. Now these change on a yearly basis, but currently the first 63,500 of your pension money goes into an AMRF, which needs to stay in there until age 75. Now currently you can draw down 4% of that per annum. So if you've got it in a vehicle that's producing 5 or 6% or 5% net of charges, and you're drawing 4%, that's growing pension money. So you've grown income off that. The balance over that amount goes into an ARF. Currently it's 4% drawdown on that as well, but it's a compulsory drawdown on your ARF. So anything over your 63,500 goes into your ARF. That's invested as well, and you draw down that. Now the difference between your annuity and your AMRF or your ARF is your annuity will be guaranteed for 5 years, but when you die, it's gone. It dies with you. Whereas your AMRF, your ARF, they pass on to your estate. So effectively, if you're growing it right, getting good advice, you draw down the money, but you still have your capital. So your capital passes on to your estate. Obviously, you're like your wife and children. Now, one thing I overlook to say is, if you have an other pension of 12,700, I think it's 12,700, you don't have to buy, or you don't have to invest in an AMRF. It can go directly into an ARF. Now, another thing with your ARF is you can actually draw down. So there's a compulsory drawdown of 4%. Now, I could be wrong on that. That was 5 last year. These things change. But you can draw down. You can draw down as much as you want. You can draw down a balance effectively and pay tax on it. I'm just going to pause this a sec. And then the last thing I'll say is the AMRF, or the Approved Minimum Retirement Fund, at any stage between when you take that out and 75, you can purchase an annuity with that. So it doesn't. So obviously, the older you get, the better rate you'll get on an annuity. Annuity is actually worked out on mortality. So it's the mortality risk. So the older you get, the better rate a life insurance company. basically, if you're Banjax, the life insurance company will give you a good rate on your annuity. There's enhanced annuities now, so if you're really in a bad way, they'll give you more money. The ARF is a far superior option at the moment. Now that could change, but I can't see it. Any questions, come back to me on www.futureprooffinance.ie. See you all. Bye bye.